Guys, we're finally here. Interest rates are rising and it's creating unique opportunities for new real estate investors. So if you haven't gotten started yet and you've been waiting for the right opportunity to get into the game, wait no longer, it's here. But don't sit on the sidelines, because if you sit on the sidelines, you're going to miss this new wave that is about to hit us. We're going to go through the data today, so stick around to look at the numbers. If you're new to the channel, like, comment, subscribe. Leave a comment that says I subscribe. For everyone who leaves that comment, I'm going to send you instant access to one of my free real estate trainings. And in fact, if you're on IG, DM me cash flow if you want to tap into my free real estate training. If you want to learn about some of our real estate mentorship programs, we have the Boots on the Ground program, where we find, finance, rehab, tenant, and manage properties for you. DM me Boots on the Ground, and we'll send that over to you and get you tapped into that program. We also have our real estate ride along tour that's coming up on August 31st. That's a Saturday. You're going to spend the day with me in Philly, looking at properties all day, inspecting properties hands-on, getting that hands-on knowledge of real estate. If you're looking for that hands-on experience, just DM me Ride Along, and we'll get you tapped into that. Guys, I'm going to take you guys through the data. We're going to walk through a article. Who put this together? This is from Narada Real Estate Investments. So it's a really good article. It's going to break down where the market is, and we're going to go section by section on the market. So if you're ready for that market update, stay locked in. I'm going to go through this pretty quickly. If you have questions, comments, drop them in the chat section, drop them in the comment section, and we'll answer your questions as we flow through this. Let's kick into the mindset. The mindset for today. And guys, if you're on IG and you want to tap in to see the full presentation, click the link in the IG stories, and it'll take you to the YouTube channel where you can see the full presentation of what we're working on. Mindset. This is your final warning. The mindset for today is, it's time to get off the sidelines. If you've been looking for a way to get into this game, or how to get a property going, a deal going, get some cash flow, get a rental property in 2024, and you haven't done it yet, you got to wake up. This is the final warning, because if you sit on the sidelines for a little bit longer, you're going to miss the wave. Prices are going to go up as we get into next year. We're going to talk about why. Rates are falling, and we're going to talk about the thresholds on where the market is just going to absolutely explode, and you're going to get left behind. But this is the final warning. I've been talking about this exact scenario. You guys can go back and watch the lives I did last year. We've been talking about this, when rates are going to fall, when the Fed's going to start cutting, as we're getting closer to the election, all of these different things. We're here now. So this is the final warning. This is your final wake-up call. If you don't get in the game this time, you're done. You're going to get left behind. If you don't know how to get in the game, just DM me cash flow, and I'll get that sent right over to you. Guys, like, comment, subscribe, and share the content with somebody else who you want to get value, who you don't want to get left behind in this game. On YouTube, my YouTube guys, we're closing in on 20,000 subs. So we're right about to cross over that threshold. If you haven't subbed up yet, hit that sub button. Push us over 20K. The community continues to grow by the day. Let's get into this article, because I want to power us through some of this. So if you guys didn't know, rates have just ticked down to like 6.7%, which is about a full point lower than the highs that we've seen over the last year. So we're already down a point, and we're probably going to go much lower. We're projecting like 2 percentage point cuts next year. So rates are going to fall dramatically. I've been actually saying this, and people didn't believe me when I was saying it. But my theory has always been, if rates could go up that fast as they did, rates can actually fall down fast too. So what goes up fast, it's just like they say, if you make fast money, you get it fast, you can lose it fast. If rates double really quickly, like the fastest they have in history, why wouldn't they be able to fall quickly? So people had that mindset like, oh, well, rates are up, but they're just going to stay up magically. They won't fall fast. Why? Why won't they fall fast? They went up fast. What goes up fast can also come down fast. So rates are likely to fall pretty quickly, faster than most people think, as we get into 2025. I'm projecting that we're going to see 5.25, maybe a little bit lower next year. It's going to happen a little faster than people think, I would project. Let's get into some of the data, though. And if you guys have questions, just drop them in the chat section, drop them in the comment section. So what's going on in the market right now? Well, there's a couple different things. One, let's talk about existing home sales. Existing home sales have been down. They've been down. In May, they've been down about 0.7%, so almost 1%, and almost 3%, 2.8% year over year. New home sales very similar. They're down like 11% from April to May. That month to month, they're down. And then that's constituting about 13% of the total sales for the year. So it's pretty low. Housing inventory. This is what I track as a real estate investor. How many houses are hitting the market? Is there good inventory on the market? Are there good investment opportunities? Existing home inventory increased by almost 20% year over year. So the market is what we would call like frothy. The market is producing more deals. More deals are sitting there. People are price dropping. I think in a market like Philadelphia, you'd expect about 30 to 40% price drops on existing homes. So when people ask me, Brian, do you have to go over asking price? Are there bidding wars that are driving up price? Well, 40% of the deals are seeing price drops, which is telling you that sellers are coming in way too hot and they're having to drop. So you can definitely offer some low ball offers. If you do it at volume, you're going to win some deals, some really good deals. But inventory is up over those 2020 levels. And that's a good thing for new real estate investors. There's builder confidence indexes out there. How is builder confidence? Builder confidence is still below the 50% benchmark. There's like a sliding scale from 0 to 100 of builder confidence. Anything below 50 is a lack of confidence. Anything above it is, getting into pretty good confidence. Right now, we've increased from 43 in June to 40. We've increased to 43 from like a 45 in June. So we're kind of in that range. We're still not doing too well. But with that being said, people are building these multifamily properties. So multifamily housing, that sector is still really high with almost 1 million units in progress right now. There's almost 1 million multifamily projects and units that are going to hit the market. So multifamily, that sector, as you guys know, if you want to be like a multifamily investor, that's always hot because there's always good cash flow there. The housing market in terms of new builds, it's certainly been hit on the commercial side for like apartment housing and all those things. That's just been not too good for this year for obvious reasons because rates have been high. And a lot of economists are saying that rates just simply can't stay high because a lot of the debt on these apartment buildings, on some of these bigger multifamily deals that are on commercial loans, they renew every 10 years. They're like 30-year amortization with a 10-year balloon. So they'll only run them for 10 years and then you have to refi into a new debt cycle. A lot of that debt is coming due in 2025. And if rates don't fall, people are going to get crushed. The market's going to get hit bad. Banks are going to get hit bad. The Fed is going to drop rates pretty dramatically next year because of that, because they don't want to cause a tsunami of debt that can't be refinanced. And, it would essentially collapse the economy. Somebody said the multifamily is going up like crazy in Atlanta, bro. It's going up all over the country. Everywhere you look, multifamily housing starts are up and people are building. So it's showing you that if the big money is doing it, there's probably opportunity because big money, they're not just going to go build a 500 apartment unit building or 100 apartment unit building. They're going to do the research. They're going to pay analysts to research. Is this a good area? Should you buy here? What market trends are going on? Is there public transportation being built? So a good investment strategy is to actually follow some of these big box buildings that are building these big units and buy where they're building. So if you see them building in an off-skirt, buy around there because they're doing the research. So you can piggyback on $1 million worth of research. And it's a really good strategy because they're not going to build there if they don't run their numbers. This is important. Trends in home prices and mortgage rates. So we already know rates have been up, but they're down almost a full percentage point now. Housing prices nationally, month over month, there's been a 0.2% increase. So that's kind of modest. But year over year, 6.3% increase nationally. So prices are already going up while rates are high. What do you think is going to happen as rates fall? I mean, you don't have to be a brain surgeon, right? Prices are going to keep going up as rates fall. If rates fall below 6%, which we're going to see, mark my words, I'll bring this video back up. We're going to see next year rates go below 6%. Prices are going to skyrocket. And I think that that's the psychological barrier. There are two psychological barriers right now. One has been 7%. as rates fell below 7%, which happened recently, we've seen refinance activity. Let me blow this up on the YouTube. Right here, as rates dip below 70%, we've seen refinance activity up 25.9% in the last week of June compared to the previous month. So it's up, a quarter of 100%, right? 25 points. And then purchase applications rose 8%, almost 10%, month over month by the end of June. That's just with seeing like a 6.7, 6.8, 6.9. So imagine if rates go down another point, and the Fed's going to start cutting dramatically. When rates go down another point, you're going to see refinance applications double again or triple, and you're going to see purchase applications increase. But you have to, I'm telling you guys all this data because you have to pay attention. The market is about to move very quickly, very, very fast. So sitting on the sidelines, you're going to get left behind. This is not going to be the time where you can, oh, let me go get into a course and figure this out and I'll figure it out. The market will just wait for me. The market's not going to wait. The market's going to take off and you're going to miss out. That's literally what's about to happen to a lot of us who've been sitting on the sideline saying, oh, I'll wait it out. Oh, I just got a new job. Let me think about this. I'm going to just balance into my new job. And when I feel settled in, I'm going to come back. By the time you feel settled in, prices may be up another 20% because they just went up about 6.5%. But in some of the top 10 cash flow cities, they're going up 10% already into higher interest rates. As rates drop, they're going to go up 20%. Why would you wait to pay more? It doesn't make any sense. Somebody said, this is me, seeing low sixes on FHA. This is from Travis, the loan expert. He said he's seeing low sixes on FHAs, VAs, and USDAs right now, which is shocking from what we've been seeing, 7.5s, 7.8s on these same types of loan products that we've been seeing like earlier this year. So those who are in the know, who are tracking this, we already know what I'm talking about is it's real. It's as serious as a heart attack. If you're sitting on the sidelines and thinking this is some sales pitch, it ain't. This is just the hard facts, guys. The opportunities are here. So you got to wake up. You got to take advantage of them. Housing market predictions. This article is predicting, rates could drop below 6.5% by 2025. I think rates are going to drop below 6.5% this year. We might see rates below 6.5% next month. So I'm not sure. I mean, they wrote this article recently, but rates are going to fall pretty fast. The conclusions, and I really only care about the investors. I mean, if you are a first-time home buyer, those entering the market may find a slight reprieve with potentially lower rates in the coming years, but high home prices could continue to pose challenges to affordability. What that's saying is, if you're going to be a first-time home buyer, if you're going to house hack, if you're going to do an FHA house hack, buy a bunch of like a triplex or a quadplex, live in one unit, rent out to others, and try to cash flow, you better buy now. You better start looking now because the longer you wait, the higher prices are going to go in that sector, in the first-time home buyer sector. Rates are going to be better, but that's going to be better for everybody. So everybody running around with the FHA, they're going to start driving up prices on the top end. For investors, and this is where I look at, for investors, increasing inventory and potential rate cuts may present unique opportunities in the market. However, investors should be prudent, keeping an eye on economic indicators and trends in home affordability. Well, you're here to kind of learn about that. If you're not tracking this stuff, daily like I do, you're learning about it now. Some of the trends, what's going on. I would say for investors in general, the trends are very positive. But if you wait too long, you're going to miss out. But what this is going to do, and guys, if you're getting value, like, comment, subscribe, leave a comment that says I subscribe. DM me cash flow if you're on the IG. DM me cash flow if you want to tap into some of the free trainings or the boots on the ground program. You want to learn about that stuff. Just shoot me a DM. Don't drop the comment. DM it. And me and my team will reach out. What this is going to do is create opportunities for cash out refinancing. Nobody's really talking about this because people, as soon as rates went up a little bit, everybody started beating up on the BRRRR strategy. Oh, the BRRRR strategy is dead. Oh, look at my no cash investing course. Don't do the BRRRR strategy. Don't buy houses. Well, the BRRRR strategy is about to make one hell of a comeback. When rates go down even close to like 5.5, 5.25, 5.75, cash flow starts getting real nice, like real nice on these deals. If it gets into the fours, the high fours even, or the low fives, 5.25, the cash flow on your average single family in the top 10 cash flow city is going to hit $700-800 a month on average. There are going to be some strategies you can do, like co-living, where you can unlock $1,000 a month of cash flow on a single family. And you can start doing these cash out refinances, which is where you can buy a property, put some money into it, and then refinance out 20-30,000 more than you put in. So you're literally at that point getting paid to build houses. Some of you might think that that's crazy or it doesn't make sense to you. It's like flipping houses to yourself. You get paid to build the house, and then you keep it and cash flow it and use the money that you made off of rehabbing to go get another and go get another. And if you use this strategy correctly, anybody watching this right now, you could run up 10, 20 houses in a year as a novice at the end of the day with the right guidance. With the right guidance, you can do that. As a sophisticated investor, you can run up 40, 50 houses in a year. I've done as many as 150 in a year. And I can definitely crank, right? Like I'm no novice. And when I did that, as rates were really low, I was no novice, right? But that's how this game works. That's a reason why you want to get in and start to learn this stuff now. Because if you can learn this stuff now, when rates kind of fall into that range and you start seeing cash out refi numbers, you can run up your bag. You only need, think about it, for the average person watching this, if you're making 100K a year or less, even 150K a year or less, if you run up that type of bag, 10, 15 deals, and you're cashing out 20K a deal, tax-free money, that's 300,000 tax-free, and you pour that into more deals, and you're getting cash flow and tax write-offs, you're done. You're out of the 9 to 5 in a year with the right game plan and running at the right pace. So this stuff is serious, and there are going to be some people who take advantage of it and get to the next level, and there's going to be some people who don't, who think they're going to wait out the market or time it correctly, and they're welcome to, in my opinion. You're all welcome to sit on the sidelines for as long as you want. All of my boots on the ground people would love for you to sit on the sidelines. Everybody who's in the game is like, no, don't listen to Brian. Sit on the sidelines. Let us eat your lunch. They're more than happy to. But I want all of you guys to win. I'm abundance mindset. I believe that we could all win. There's enough inventory. Most of these cities are over 100 years old. They were built in 1910, 1920. They're all 100 years old. The inventory is failing. We need more developers out there to rehab these communities. And you could be one of those people. If you'd like to be, you can create for affordable housing and you'll get paid handsomely for it. Nobody cares. I was explaining this to a mentee the other day. Real estate is $1 trillion industry. Nobody cares if you make $1 million. Nobody cares. Nobody's going to pop out. It's not like your 9 to 5. At your 9 to 5, your boss cares. Your boss cares if you earn more than them. They care if you make money or more than them. They don't want it to happen. Literally, they would be jealous. They would be angry. They would be upset. They wouldn't be able to sleep at night. But in the real estate game, you can go out and make $1 million in this game. Nobody cares. Nobody's going to stop you. Say, oh, no, you're making too much money. We don't want to see that happen. As long as you're out doing good, creating jobs, creating affordable housing, people are going to champion you and cheer you on. So you just got to get into the game and keep cranking. Guys, hope that helped. If you have any questions, drop them in the chat, drop them in the comment section, and I'll start answering some of these questions now that we covered some of that data. And like I said, if you got value, like, comment, subscribe, share the content with someone else who you want to win. This could be somebody else's wake-up call. And if you want to connect with me and my team, learn about, our real estate ride-along tour, that's going to sell out quickly. I've been getting more and more calls now that we're getting, I guess we're almost a month out. We're almost at the end of July, so we're almost a month out. That's going to sell out. So if you're interested in a ride-along, reach out, DM me ride-along so you can get your ride-along tickets. You'll get a 24/7 cash flow hoodie, get some gear, get some course content, spend a day with me. So reach out about that. There's the Boots on the Ground program. We only have, I think, one spot available. There were some people who tapped in today, some people who tapped in over the weekend. There's only one spot available right now. So if you want to get into the Boots on the Ground, DM me Boots on the Ground ASAP. If you've been sitting on the fence on Boots on the Ground and you're watching this, you better wake up. Somebody was like, Brian, can I get in on the next cycle? I was like, there ain't no next cycle. What cycle? Once you're either in or you're out. And once the program fills up in terms of capacity, the door closes. We are also going to be unrolling. I'm deadly serious about Baltimore. Imagine this. I unroll Baltimore in the Boots on the Ground program as we go into extreme decreases in interest rates. And I bring everybody into one of the cheapest high cash flow cities in the country. Well, that's what's about to happen. You're not going to have to imagine it. You're going to have to sit on the sideline and watch it and watch other people win while you try to raise your hand from the sideline. Like, hey, coach, can I get in the game? And it's like, yo, I tried to sub you in. You said you weren't ready. So you better reach out. DM me Boots on the Ground. DM me Cash Flow. And we'll get you guys tapped into that. Let's start to answer some questions for you guys. Somebody said, did you pay for education or self-taught? I paid the ignorance tax. So here's the thing. And this is your Dara Lynn said this. Did you pay for your education or did I get into a mentorship program or am I self-taught? There's almost no such thing. So we all pay for education. Some of us just get into mentorship and pay less. And I was looking for mentorship over a decade ago when I first got started. All I could find, because the social media wasn't built out to the way it was now. I couldn't find me. If I could have found me, I would have been like, here, take my money. I would have seen the source, be like, yo, take my money. All I could find, there was two people out. There was this one guy who's still out right now in Baltimore, believe it or not. And he was talking about how to wholesale. That was his thing. But it was hard to get a hold of. Like literally, people weren't even really doing paid ads and stuff. People didn't know how to do it. So you really couldn't get to it as easily. And when you bought it, you would get like a booklet and a DVD set. Like that was what went out like a decade ago, like a DVD set. It wasn't really a coaching program. You couldn't even interact with people like this consistently. And then there was like something I found on Google, like a Russian lady charging 10 grand. This was over a decade ago, 10 grand for 10 1-hour phone calls. That was what was out there. So I was like, well, I guess I got to figure this. And I did a sample call with her, and it wasn't like she was really into it. She didn't really understand the market I was in, or she didn't understand how I was trying to invest because I was broke, right? I was coming in. I might have had like 30,000 saved, which is it's not a ton. Right? It's enough. It's good, but it's not a ton. And she was like in New York and she was working with people who had, 150, 250,000. She didn't know how to take somebody at my stage and show them how to build wealth. So it wasn't for me. It just wasn't going to work. So I had to go out in the School of Hard Knocks. I went out there and I got burned for 50 grand on the first deal by GC, the first real serious deal I tried to do. So I had to pay the ignorance tax. I paid millions of dollars in losses to get to the level of knowledge that I'm at now. So if I offer somebody a course or mentorship at a minor fraction of peanuts compared to that, they might look at it and say, well, I don't want to pay that cost, but they don't understand the ignorance tax. The ignorance tax is like, yo, you got ripped, the contractor came in, they're going to burn you for 30K and you got to pay it or your deal freezes and you lose more money. So the ignorance tax is unforgiving. Unfortunately, a lot of people learn that way, but you're going to pay either way. The smart investors just get mentorship because mentorship, I mean, you can get in for a few $1,000s, boom, you're in. There's some mentorship programs, $200 a month, $300 a month, and you can get the education of somebody who's lost millions of dollars trying to figure it out on their own. That's what a smart investor does. What a hard-headed investor or somebody who thinks they're smart or penny wise, pound foolish person does is thinks that they can go out and that they're going to be the chosen one who's going to battle the School of Hard Knocks and not pay any costs or learn any tough lessons because they're so smart. Those are actually the people who lose the most because they think they're so smart that a contractor can't burn them. They think they're smarter than the contractor. There are games out here. There are hustlers out here. And guess what? They've been hustling longer than you've been alive. Hustling longer than you've been alive. They know the game. They know how to hustle. They'll three card money you. Oh, it's over here. It's over here. Got your money. End game. And that's going to be your lesson. And then what do you learn when somebody rips you off like that? You don't learn anything other than how to not get ripped off like that. But you haven't learned how to not get ripped off in 100 different ways. How you can get ripped off in every different way in this game. You haven't learned that yet. You're only going to learn that through mentorship and somebody who's been through it, or somebody who's learned it from somebody else. So those are the two ways to learn, but you pay either way. There is no self-taught, purely like self-taught, and I didn't go through any pain. There's just paying the ignorance tax over and over again until you don't have to anymore. Ignorance tax is usually around, conservatively, probably $250,000. So if you got $250,000 to burn, go burn it. But also there's no gold medal for doing it. Nobody cares. If somebody takes $2,500 and gets in a mentorship program, and you go burn $250,000 to learn the same thing, do you think you get a medal over somebody who just went and tapped in and probably got results faster, has more deals than you, and is accelerated beyond you? You can walk around like you're the people's champ. Nobody cares in this game. They only care about your results. What have you done? How many wins have you got? How many deals you got? How much cash flow you got? Are you out of the 9 to 5? You're doing this for your family, not to get some badge of honor that you did it yourself. There's no reward for that. You're just going to set yourself back a decade. And I've seen it. I've passed people who refuse to invest in themselves, who refuse to grow. I've passed them in deal flow and acquisitions. I've leapfrogged them many, many times. Many guys started before me, never achieved, what I achieved, because I was always doing things with a different mindset: team building, scaling, being able to grow, being able to do it long distance, remotely, being able to invest remotely, just having that skill set. How do you invest remotely? What systems do you need? What teams do you need? How do you control your money? You don't got to be standing in front of a guy to control a project. You can control the money, control the project. Knowing all of these things will springboard you to millionaire status. Because like I said, nobody cares if you win. Nobody cares if you make it. But you just have to learn the right lessons. So you kind of choose how you want to learn. You either want to pay the ignorance tax, which is $100,000 to $1 million. If you're lucky, $250,000 to learn, or you can just go get into a course and learn. And you'll learn just as fast. Actually, you'll learn tremendously faster with tremendously less pain. But that's up to you at the end of the day. Life will teach you better than I will. For some of you. Some of you need to get whacked over the head. That's how you learn. Because you truly think. You're so skeptical to your own detriment. You think I would have been skeptical talking to me 10 years ago? I would have known that guy knows more than me. I want to know what that guy knows. How much is it? Okay, cool. Because I don't want to get burned. I don't want to get ripped off. I never wanted to. I had to go to School of Hard Knocks because there was nobody like me who had walked this path of trying to build the wealth through the BRRRR strategy from the bottom, from the very bottom, from being broke. Everybody in the family's broke. Nobody has the financial acumen. Nobody's giving it to you. Like, to really dive in at that level and build it up, I had to be the one. So it was a hero's journey in that sense, because I was not just doing it for me. I was doing it for everybody around me, and was able to lift up a lot of people around me in doing this, and still am. And that's why I did it. But it was not like, yes, I want to go on my own road. I did not. And I did not choose. I did not look for that initially. It was just like, I got to get started. I wasn't going to wait. So if I couldn't find me, I was just going to become me. But if I could have found me, I would have just done it. Trust me. And I was looking to do it. And that stuff cost 10 grand a decade ago, which is crazy, right? That's the purchasing power of that money was substantially more than the purchasing power. It was almost like 20,000 today. And there are people that charge 40, 50,000 for mentorship today. It's crazy. Some of the numbers. Guys, if you have any questions, drop in the chat. We'll keep flowing for a little while. And if you want to learn more about the mentorship programs, the real estate ride along, the boots on the ground, where we find, finance, rehab, tenant, and manage for you, DM me cash flow, DM me boots on the ground, DM me ride along. I also have that stress test toolkit. If you want to learn how to analyze deals like a pro, and you want access to my deal analysis tool, my cash flow tool, DM me stress test, and we'll send that over to you. We'll send you that analysis tool. I'll just send you a link, and you can tap in, download it, and there's a training video to show you how to use it. Absolutely free. So no reason not to tap into that. Would you buy down the rate to break even with your rents? Probably. From a cash flow standpoint, if I had the ability to buy down my interest rate, and that would put me in a position where I was just net neutral on cash flow versus pouring out of my pocket month over month, I would do it. I would definitely do that. That makes a lot of sense. Ruben said that's so true. Let's see if we have any other questions here. GB said, Brian, you have to duplicate yourself to service all those people. No, you can't help everybody in this game. I mean, look, there's a lot of free content. You guys can dive into the YouTube lives, and you'll get a lot of education. There are more people out here who've learned strategies from me just from tapping into these live sessions that are out doing deals. Sometimes they reach out and call me, Brian, I got a deal. And I'm like, well, we never even spoke, but they pick up the game, which is perfectly fine. So we're able to help thousands of people through just doing this. But definitely, like, you can't help everybody. I am just one guy, but in abundance mindset, there are millions of people out seeking this knowledge. I see it every day. And I only get to work with so many of you personally and build those relationships. For those who know, it will help you to get to the next level. A lot of our people, especially in the Boots on the Ground program, I'm working with you guys one-on-one. You got access to me one-on-one, text, email, Zoom calls. We're meeting privately every week. So getting that level of access, that takes you to the next level very quickly. So, you dive in and you tap in while you can. That's why I tell people, like, if you miss it, you miss it. It's not really my problem. It's more your problem. If you want to sit on the sidelines and kind of wait it out and miss it, but definitely don't. But no, I'm one of one, and GB knows that. I have my own way of thinking. I have my own way of analyzing this thing, and I'm not locked into only the way I do it. I mean, there's 101 ways to make money in real estate. You should learn about as many of them as possible and test out your strategies to put together kind of your master strategy. You might like to flip a little and hold some. You might like to wholesale and hold. You might like to do creative financing. They're all fine strategies. I think the only negative with some of these guys who are talking out here is that they try to lock in like one strategy beats every strategy. There is no one strategy that beats every strategy. There's pros and cons to all strategies. I would say buying and holding tends to beat flipping. There are multiple ways to buy and hold, though. It tends to beat flipping in the sense that you get so many tax benefits from holding, and you get appreciation and all these long-term benefits. You get paid over and over for what you did years ago, not for what you're doing actively. So holding definitely gives you a lot of benefits that you don't want to necessarily pass up on. So the smartest investors hold. I will say that. But there are a lot of ways to make money in this game. If somebody's trying to convince you there's only one way, they're just lying to sell their program or their way. So I think this industry in terms of real estate coaching needs to be a little bit more open-minded. Some of these guys are closed-minded and they try to fear-monger you into one strategy. I'm different. I'm trying to teach you guys multiple strategies so that you can navigate and choose the strategy. Somebody came into our mentorship program and we were talking. I'm talking to them one-on-one, working with them one-on-one. And I'm like, you know what? Why don't you just get into private lending? Well, she started doing that. She's making great money. She's making great money. She doesn't deal with any rehab, anything. So she actually got into the business and just started lending because she had a pot of money from like the retirement income, 401k, all that stuff, and is able to leverage the pot of money. So 101 ways to make money in this business, but the only way to not make money is to sit on the sidelines and not get in. That's really the only way. That's really the only way. Just Vibe says, I didn't understand my meeting yesterday between Inner Circle and VIP. Is there a middle? No, you're in the Inner Circle. Inner Circle, if you have access to the VIP course content, you're in the Inner Circle. Just make sure you check your email. DM me or text me, and I'll send you the link for the Inner Circle call so that you can get tapped into all of that. And we're also going to unroll like a community Slack channel so that you guys, I'm going to be unrolling that in the next week for you guys. So everybody can kind of jump in and network within that as well. The networking, I would say, within the Inner Circle has been one of the most exciting things that I've seen since we started doing the Inner Circle calls. People are really networking, connecting offline. and doing amazing things. Guys, if you're in the Boots on the Ground program or the Inner Circle, I have a Boots on the Ground program member. He's from outside of the country. He's from New Zealand, and he's looking to partner with a U.S. investor because there are going to be some different type of lending options that he'll have access to through a partnership, which would be good mutually. But he's got decent pockets, right? So he can bring 100% of the capital to the table for deals. So this could be a good partnership opportunity if you're new, if you're just getting started, if you don't have a ton of a ton of capital. So DM me if you're interested in that. Even if you're new and you're like, hey, I'm thinking about getting the Boots on the Ground. I don't have a ton of capital. I'm thinking about joining your Inner Circle, but I don't have a ton of capital. I want to partner with somebody. You can partner with this guy. He's rock solid. I just finished my first deal for him, and he's from completely out of the country, but he was like, Brian, I want to partner with somebody. I'll put up all the cash. I'll kick him a little chunk of change to do a partnership. This could be good. So guys, reach out to me. He's deathly serious about this. And I told him, look, I'm going to get you a couple of options this week, some people to reach out to and kind of talk to. So this is kind of the networking that happens when you tap into the right groups, where you got somebody like me who knows a lot of people, knows a lot of lenders, knows a lot of private money, lenders, and we can just connect the dots. So this isn't even like the private money lender relationships I'm talking about. This is actually an investor who's got pockets, who does deals from in the U.S. from abroad. So he's investing. For some of you who are like, can I invest, in Philly from Florida and this guy's in New Zealand, and he's investing in Philly, and he's investing in he's in another market. He might be in Detroit, but he's like, Philly's a gold. Like he's feeling us now. So especially now that we rounded the bases on his first deal, like he's really feeling the city of brotherly love. So get in, start connecting. Money is not your issue. Resources, relationships is your issue. Knowledge is your issue. If you were already a Boots on the Ground member, I could just connect you. But sitting on the sidelines, that's your issue. Is you don't have a good circle. If you don't have a good circle, people around you, and most of us don't. I certainly didn't when I was getting started. I had my best friend. He was investing in real estate. That was my circle. That was what helped me. And it helped him too. I'm sure he would say. Our conversations together, we still talk about strategies and ideas. I was talking to him last week for his birthday, 2 weeks ago, and we were talking about a strategy because he's out in a St. Louis market now. And we were talking about different strategies where he's like, I could take that and make more money. I'm like, yeah, do this, do that. So having a good inner circle is the difference. It's not just about a mentor. Tapping into me, I can accelerate you. I can educate you. I can point you in the right direction. I can keep you motivated. I can fire you back up if you're feeling down. I can connect the dots for you. But also having a circle, a community of other like-minded investors that are at a similar stage of growth, that are, hey, I'm just getting to my 8th deal. Hey, I'm just getting to deal number 3, where you could say, oh, talk to me about deals 1, 2, and 3. And they're right there with you. And they're like, yo, it was yesterday. This is what happened. This is what you need to look out for. Having those relationships, even outside of a mentor, that makes all the difference. That is like a next level of difference. So getting in and tapping into a community, very important, very underrated, especially as somebody sitting at the helm who can see the community that's being grown. It's amazing to me. It's amazing. It's a lot of fun to see. It's more fun for me to see you guys building each other than at times for me to even build you guys individually. Because then I'm like, man, this thing is just flowing, even without me. So, guys, definitely reach out if you're interested in any of this. Reach out, DM me cash flow, DM me Boots on the Ground, DM me Ride Along before those tickets sell out. And those tickets are going to sell out very soon. And we'll get you guys tapped in. Share the content with somebody else who you want to get value. Like, comment, subscribe. Leave a comment that says I subscribe on the YouTube channel, but sub us up. Push this thing over 20,000 subs. And then the next target is probably like 50,000. I'm going to start cranking this thing up and push it up to 50, 100K on a YouTube channel. But stay locked in. Do not sit on the sidelines. This is a unique opportunity for you guys to get into the game. Somebody asked, how much time until you can refi This is Will Mendez. How much time until you can refi and get a return on your investment? So if you go into a burst strategy deal, you purchase a property, you rehab it, you pour in some money. The average rehab on a cosmetic deal is around 10 to 12 weeks. Don't let anybody fool you. When I first got started, there was a guy running around, I won't say his name, but he was advertising 6 weeks. I can full gut renovate a house in 6 weeks. We will full gut it in 6 weeks. Ain't nobody on the planet full gut no house in 6 weeks. Unless it might be a tiny home. You can full gut like a mobile home in 6 weeks, maybe. But 6 weeks is way too slow. 10 to 12 weeks, that's about the time. That's 2 to 3 months. So if you buy it and you rehab it, you can refinance out of it right away. You really only need to hold a property for 30 days to refinance out of it. That's called a seasoning period. A seasoning period of time. 30 days. If you want to do that's for like a 75% refinance. If you want to go to 80% refi, usually you have to hold it for at least 90 to 180 days, 3 to 6 months. But if you're going to rehab it anyway, you don't need to worry about it because the rehab is going to take you 10 to 12 weeks anyway. So you buy it, you go through your rehab. As soon as you're done, you get it on the market, try to find a tenant, and you refinance out of it. Who do you refi through? You go to the credit union. You go to the portfolio lenders. You go to the non-QM, non-qualified mortgage lenders, non-QM. Go to that market because you're a commercial level investor. You get a DSCR loan where they're just evaluating the property. These properties, by the way, I get this question a million times. Brian, these deals, if I get your boots on the ground program, I've never done a deal before, and I do some deals through boots on the ground. Am I going to not be able to buy a house now because I did a deal through boots on the ground? No, you could do 100 deals, buy 100 rental properties like I did before you buy your first house. And then you can go do a FHA loan, a first-time homeowner's loan, because every deal you do as these rental properties, these commercial type of deals, they're done through LLCs primarily. That's the only way to get the money, to get with 100% lenders. Do it through the LLC. When you do it through the LLC, the property's owned by the LLC, not you, which means it's not popping on your debt to income ratio. It's not on your credit score. It's on the LLC's ratios and their credit score. So it doesn't even show up as a blip on your radar. So when you walk into the bank to get your own deal, you still don't own anything personally. The LLC, you only own an LLC. The LLC owns everything. You're a guarantor maybe for the LLC, but as long as the debt is being serviced by the rent, everything's fine. Nothing's coming at you. So you can go out and still do an FHA loan, still house hack that triplex, even with 100 rental properties. I get that question a lot. So no, it has no impact on your debt to income ratio. So you can definitely do this game. You just got to lock in and learn. The more you learn, some people, even me dropping that game, that was holding somebody back. Somebody's going to watch that. Actually, I bet a bunch of people, because I get that question at least 5 times a week from people who are interested in boots on the ground or other, other types of the programs that we offer. I get that question. So that's holding them back, not having that little nugget of knowledge. It's usually like that, guys. It's usually not having a couple of key pieces of knowledge is what holds people back. Just not having access to a couple key pieces of knowledge, now you're held back. Now you're like, oh, wait, I can still buy the property? Oh, I didn't know that. I sat on the sidelines for 2 years because I was waiting to buy a personal residence. I was like, well, you probably should have got your knowledge up. You waited 2 years for prices to go higher. Now that property that was selling for $50K is selling for $150. That wasn't smart. So it's always smart to just get the knowledge and get in the game. The other reason you have to get into the game very quickly is you're getting older. You got to look in the mirror. You start seeing a couple grays growing in. Man, you start thinking things like, well, the average rehab is like, if it takes 6 months for a gut job, how many 6-month cycles do I have left on the planet? What's the life expectancy? Dang. I gotta do more deals and less time. I gotta scale this thing up. You don't have time. If you're really locked in, you don't have time to be playing around. You don't have time to be wasting. You know how many years you got on this planet? You think you got more years to waste? you're tripping. You're not locked in. You don't need that extra vacation. You need to get tapped in. If you get tapped in on this game and get your cash flow going, you don't even need vacation. Every day is a vacation at that point. Once you get unlocked from the 9 to 5, every day is a vacation. You wake up, you go to the real estate, you feel like working out, you go work out. I was talking to one of my guys. I was doing a quick workout today. He was like, yo, I'm going to the park. I'm going to do my workout. I'm hitting my calisthenics. I'm hitting my pull-ups. I'm like, oh, you going to that park? I know that park. That's a good park. That's what real estate investors, that's how they're living. They're not chasing that 9 to 5, not chasing a weekend. Don't need a vacation. What are they vacationing from? If I get up and go to another country, guess what? It's just me in another country. It's the same thing. I wake up, I still do the real estate. I'm just in a different country doing the same thing. Doesn't matter. Doesn't matter. It's not even fun to get away from the real estate. Because you can just build your ideal lifestyle around the game. You could spend the time with your family around the real estate. You just do everything around it. So you got to get in, but you don't have time to waste. You don't. You just think you do. And you think that it matters. You think that it's cool to be distracted, potentially. Or that it matters, or that somebody cares. Nobody cares. You can be distracted until you drop dead. Nobody cares. Just like nobody cares if you get undistracted and go out and make $1 million. Nobody cares. Your family cares. You'll care, but nobody's going to jump up and try to stop you. The game doesn't care. It's $1 trillion industry. It's a crumb. It's a peanut for you to make a mill. Got to get that track record going, somebody said. Sam, man, you got to get that track record. You got to get a couple deals going. This game is not about going fast. We call that like Ricky Bobby, Talladega Nights. I want to go fast. I want to go fast. A lot of you people are Ricky Bobby. It's not about going fast. It's about stacking wins. It's about going slow and steady. Aesop's Fables. Slow and steady wins that race. Get one deal, win. Show the lender you can win. You do well with 100K, they give you $1 million. Do well with $1 million, they give you 10 million of liquidity. So just stack wins and then keep going. You just got to build a little track record. If you did 10 deals in a year, a lot of you don't know this, 10 deals in a year in the non-QM space, you're top 5% in the country. You ever been top 5% in the country at anything? Some people haven't. If you ain't never been top 5% at anything in your life, do 10 deals in a year, you'll be top 5% in the country. You'll see what it's like. That's called when they walk you to the car and open the door for you and wave as you drive off. That's how the lenders will treat you. They'll wave as you drive off. Hey, let me get the door for you. Because you're top 5% in the country. You're a major player now. If you get value, DM me cash flow. DM me ride along. DM me boots on the ground. Or DM me stress test toolkit. Get that stress test toolkit. We'll send you a link. Just DM me. Me and my team will send it over to you. Don't comment. DM. Here's a question. So if the LLC is buying the property, then how does the bank, if needed, run your credit for some of the loans? They just run your credit. I could run your credit. I could be like, yo, give me your social. I could pull up a website and run your credit right now. You don't need to own anything for me to run your credit or check your credit score. I can check your credit score as a guarantor of the property and say, okay, she got a 680 and the property's cash flowing. Looks good to me. I can package that debt and sell it to somebody else, which is what they're doing. So you meet their minimum qualifications. Some of these lenders, believe it or not, there is no credit score requirement. They don't even check your credit. So that's another answer to that question. There's actually DSCR lenders. They don't even care about your credit score. They look at the property, it cash flows, it's tenanted, it's Section 8. Cool. We believe in that. We can package this and sell it. Okay, cool. What, are you going to check my credit? No, we don't care. Thank you. What about my tax returns? Don't care. Sorry. Don't care. There's a lot of lenders out there like that. So they're called no doc lenders. This game is deep. So if you walk into Bank of America, you will be disillusioned because you'll walk into Bank of America and you'll be like, hey, I want to buy a house. They're going to ask you for 3 blood samples. Have your kids sign on this mortgage. In case you don't pay, I want them to pay. They're going to ask for all this crazy stuff. And then you're like, I can't get a loan. People come to me like that, Brian, it won't happen for me. I can't get a loan. I got declined. I got denied. And I'm like, well, you were barking up the wrong tree. You're talking to the wrong person. So I take them and redirect. That's what a good mentor will do. Guide you to the right area. No. Don't go over here. Go over here. Put you in this arena. Now you get in that arena, you're like, oh, you don't even need to see any of my stuff. I'm approved. The deal's good. Everything's good. It's all good. Because you were in the wrong area. So there's a little bit of both of it. But no, they're basing it on the LLC. It's not going to hurt your debt to income ratio. It's not going to hurt you. And there's even non-recourse lending where you don't even have to guarantee it. So when you get to the next level, you don't even have to guarantee the debt. It's called non-recourse. And I can tap you into those lenders. If you're doing 5 deals a year, I can get you tapped in with the non-recourse lenders, where you can just take the 5 deals, ship them over to them. They put a blanket loan on it, non-recourse, which means if anything happens to the properties, they will take the properties, but they don't come after you. GB's keeping me in check. He said it's too much sauce. You're giving away too much sauce. 4 Doors Properties. Vanessa says, at one point, is it best to refi out with a local bank instead of a private refi lender? At what point? Or any bank? I would say a credit union makes a lot of sense. They tend to offer the best rates. I think at the point where there's a part of your journey where you're scaling up. When you're scaling, you're just trying to do as many deals as you can. Let me do as many deals as I can. Let me go out. I did 2 deals last year. I'm trying to do 4 this year. Then next year, I'm trying to do 8. And you actually start pulling it off. That's a very simple path. Even though it sounds like a lot, it's very easy to do 2, 4, and 10. 2, 4, and 16. Because once you get the hang of it, you'll build up momentum. It's like riding a bike downhill. Or riding a bike uphill, you're pedaling, you're doing all this. Then once you get to the top of the hill, you can just let go of the handlebars and just cruise down the mountain. You don't have to pedal at all. It's kind of like that. You'll build up this momentum. Once you have a little portfolio, you can now take it to a lender. And a lot of people are going to do this. If you built for these next 2 years as rates are falling, you're going to wake up 2 years from now, 2026, 2027, be a little older, a little bit more grades popping in. But you're going to have a portfolio. Now you can take that portfolio to the credit union. Hey, I got these 10 cribs. Rates are lower, and the property's appreciated in value. And the tenants have been paying the mortgage down. Not a bad position. So then they appraise the portfolio and say, hey, you got $800,000 of equity. We can get you $250,000 out, tax-free, in a refinance, and we'll put a blanket on this whole thing. And that's when you can shift to some of these local lenders as you start having units. So if you come to a lender and say, hey, I want to do deals, I want to stabilize properties, they're like, oh, we don't do that. But if you come to them with stabilized properties, they say, yeah, we do that. The same people. Oh, we do that. Yeah. They're already stable. They're already cash flowing. All right, cool. Yeah, we do that. So that's when you approach them. You approach them in the reverse, not when you're building, but once it's built. You can go to them with a stabilized portfolio, and you can get cashed out on that portfolio. And that's the game. If all you did was build a 20 property portfolio and held on to it, let's say for 15 years, in that 15 years, the tenants would have paid down the mortgage by like 20%, 25%, and the property appreciates. So you might have on 20 properties, 1.5, 2 million of equity, of which you could grab $1 million tax-free, meaning no tax on that money. Doesn't even show up as earned income. And then you can take that, put it back into more deals, or just keep it, do whatever. I mean, you're kind of done at that point. So now you refinance it. Guess what do you do now? You hold it for another 15. Let the tenants pay that off again. Pay that down again. Let the properties appreciate more. Get more tax write-offs, more tax losses, and do that thing again. That's the game. That's why not holding and selling holistically, it doesn't make as much sense. Guys, if you're getting value, and I am giving away a lot of sauce on this one, now that I think about it, like, comment, subscribe, DM me cash flow, leave a comment that says I subscribe, push us up over 20K subs. If you're on IG, you want to tap into the YouTube, click the link in the IG stories, tap into the YouTube and sub up. There's a lot of content. Some Brian, do I have to do the paid course? Don't you give away free game? Why don't you give away? Go on a YouTube channel. For crying out loud, go on a YouTube channel. I've only been doing 1 hour long lives for over a year straight, week over week. That's just the YouTube. That's not even a paid game. Plus the shorts, plus the other videos, plus the 5 to 10 minute videos. 2-3 of those a week. How much game can I give you? You know, how much game do I got to give you? So just stay locked in on that stuff. Stay locked in on that stuff, guys. Where we at here? But like, comment, subscribe. Leave the comment that says I subscribe and DM me. Can everybody still hear me on the YouTube? Maybe my headphone just died. Somebody drop me in the YouTube chat. Let me know if you can still hear me. I'm gonna answer a couple more questions, and no, it just came back. There we go. Must have been the internet. Somebody just hit me with a like. Definitely let me get those likes up, guys. If you're getting value, and share the, if you got value, share the content with somebody else who you want to get value. Share the content with someone else who you want to get value as well. If you're getting value, don't be stingy with that value. But definitely DM me, especially if you're interested in any of those things, like the ride along. That's August 31st. Come spend a day with me in Philly. Put your hands on these cribs. That experience alone, that's the experience I wish I had. That experience would have changed my life. I would have been way further. I probably would have done, my story wouldn't have been how I did 300 deals in 5 to 7 years. It would have been how I did 1,000. If I would have had the chance to go on a ride along. If I would have had that person. Because before, you used to just have to be like, know somebody who knew somebody who could get you tapped in. If I would have got a ride along and taken that fear out and been told the right way to do it and what to look out for, all the pitfalls, oh my goodness. The money I would have saved, if I could have just saved that money and reinvested it, oh my goodness. You know what it's like to save and reinvest $250,000? What type of hack that is? That's crazy. So that experience, DM me ride along. If you want to spend a day, that's also our cheapest mentorship program option. It's the real estate ride along. So I make it the most accessible. And it's the thing that takes the most fear out of your chest. That's where you feel the fear, like right in here. This one, just rip it right out of your chest. So now you can run and rock and roll in this game. DM me ride along. If you want the free trainings, DM me cash flow. If you like the boots on the ground, you're like, Brian, I'm busy. I got the kids. I want to get into real estate. Well, I don't want to get as deep into this game as you are, but can you just like find the properties for me and, you know, renovate them and connect me with the lenders and get them tenanted and put the management in place and all that stuff. So it's mailbox money. DM me boots on the ground. That's what we do. That's what people love us for as well. So definitely DM me boots on the ground. We'll get you guys tapped in on that. Let's do a couple more questions. Let's see if we got any more questions in here. Can you flip a rancher? I can buy. Can you flip a rancher? You'll have to elaborate on that. I mean, one, you can flip anything as long as there's a profit spread. It's really just being able to know your construction cost, your numbers, and being able to build at the right cost. Construction is everything. Somebody said, Vanessa said, I want to stack them like pancakes. Absolutely. Just stack your wins, one win at a time. The lenders don't care how many deals you did. The lenders only care that you're winning. That's all they care, that you win. They don't care how many deals. You can run and say, I've done 100 deals. I mean, they'll like it. They do care that you've done some deals. But they care that you have a winning record. So even if somebody who said, I did 10 deals, and somebody says, well, I did 2, they look at you the same. As long as your deals were winners, they're like, well, you're a winner. You're at an earlier stage of winning than that person. But if you keep winning, you're going to be this person. They don't care. They just don't want you to lose. So stacking wins is good. This is why I recommend you guys start small, start with single family. Even if you want to go out, Brian, I want to do the biggest, multifamily. Don't. Start off small. Start off with the single, and then you'll scale your way up. Deb, I see your question. Do you recommend builders? Please elaborate on that. I'm going to come back to that, but I'm not sure what you mean by that. Do you mean do I recommend hiring like a house building company to build for you, like just a home builder? Elaborate on that. Let's see if we have any more questions. Oh, we got a couple more questions. Are you still able to help first-time investors who aren't really cash heavy? Yes. I'll show you how to invest in real estate without needing tons of cash or credit. I teach all of my mentees, you have access to it in the course content, how to leverage creative financing. So how to leverage the existing debt that's already on these properties. Believe it or not, foreclosures, I haven't talked about that in this update, but they're increasing. Foreclosures are. So people are losing their houses every day. I mean, heck, there are foreclosure auctions. There are millions of foreclosures a year in America, which means there are millions of opportunities for investors like us to approach people who are in pre-foreclosure and say, hey, you're going to lose the property anyway. Why don't you deed it over to me and let me show you how to make some money off of it? So now your skill set becomes taking a little bit of capital and putting it into marketing, learning how to market yourself so that you can get in front of what we call motivated sellers, people who are in pre-foreclosure, foreclosure, people who inherited properties. So now you're not investing in the real estate. You're not pouring the cash into the cribs. You're taking a little bit of cash, a couple $100 a month. You can start with a $200 a month. If you want to get serious about it, $500 to $1,000, maybe a month for a couple of months until you gain traction. You start investing in marketing, getting yourself in front of people and learning how to solve their problems. If you can help people, you can make money. Newsflash. If anybody didn't know that, you can help people who are in pre-foreclosure, you can make money. You just got to learn the knowledge. So you learn the knowledge, you learn how to market, and you start getting yourself in front of these motivated sellers, people who are going to lose their houses anyway. And you don't need cash to do that. How much cash do you think these wholesalers are putting into these deals? I've seen guys put out $100 deposit and lock up a deal, flip it, make 10K. And I can show you how to do it. These deals are happening every day. And there's nothing magical about these people. I've paid 18-year-old wholesalers 10 grand for a deal. I'm like, hey, buddy, see them at the closing table. They're like, oh, you're Brian? I'm like, yeah. They're like shocked to see me. And I'm like, yeah, man, cool for you. You made 8 grand on this one. Go give me another one. So I'm gonna make 50 off of it. But I don't care that you eat. I want you to eat. Go get more. There are wholesalers in Philly running around. They know I bought 10 properties from them. They made 100K in commissions in a year because they just kept bringing me deals. So you could be a person who sources deals, but guess what you're learning when you're learning how to source deals? You're learning the whole game, especially if you're around me, because I'm not only going to show you how to get in front of those people and how to negotiate with them, but also the cost of construction. You're going to be smarter than most of these wholesalers and creative financing people running around who really don't know the cost of construction at all. We'll teach you the cost of construction as well. So you don't need a ton of money. Or if you're still a first-time investor, you could house hack. My first deal, I'll pull out the numbers when I'm doing one of these back at the office. I'll pull out the numbers. I only put 7 grand into my first deal. And I got a duplex with a legal unit in the basement. I call it a triplex sometimes. Sometimes I call it a duplex. To me, it was a triplex because I had a unit in the basement. I was going to live in that illegal unit, which you could do because it's your house. You just can't rent it out legally, right? But you could live in your basement, even if it's a knock-in, and rent out the units above it, live for free. I only put 7K into that house. That house is cash flowing me $1,000 a month off of that 7K investment. And then it appreciated 3x of what I bought it for in about 9 years. So I could just show you a simple house hack. If I could get you living for free, you're now better than 99% of Americans who aren't living for free. That means every dollar you make now, you can save and put into more investments. Now you won't have a cash problem. Now you won't have a I'm not cash heavy story. You'll have a I got tons of cash because I'm living for free story. So we'll change your story. So yes, hopefully that answers the question. Not only can you invest in real estate without using your own cash because you can leverage the existing debt that's on properties, you just need to learn how to get in front of people who are going to lose their houses anyway and learn how to help them and restructure deals. So that means you need to invest more in knowledge because like there's 2 things in real estate. There's money and knowledge. The less you have of one, the more you need of the other. If you had $1 million, guess what? You could just go get burned and pay the ignorance tax until you figure it out. If you don't have $1,000,000, if you have less cash, that's more reason to invest in knowledge, because you can't afford to make any mistakes. It'll wipe you out. So you actually need to get to the knowledge first. And the knowledge is going to show you how to leverage your money better, how to do the higher return strategies first. And then you're going to get a hang of the game. So it's counterintuitive, but that's what you should do. A lot of people, unfortunately, when they're starting off with little cash, they're like, I'm not going to take this and invest in knowledge. It took me too long to get this cash, and I'm just not going to. That's the wrong mentality, because it doesn't matter what you want. That's the harsh reality. You're going to pay the ignorance tax if you don't get to the knowledge. And if you don't have enough money to pay the ignorance tax, then you better get educated. You better get educated. That's the harsh truth. That's the reality. You're going to pay the ignorance tax. Newsflash. I'm pretty smart. I went to a top 10 university in the country, in the world, really. I went to an Ivy League institution. I'm a pretty smart guy. I still got ripped. And I have a math mind. Those who know me know me. I can calculate the numbers in my mind, do all the math. Oh, worked in financial planning, worked in deal analysis, worked in finance my whole life, right? Still got burned. It doesn't matter, because these guys been scamming before scamming been scamming. They've been doing it before you were even on the planet. So you're easy work to them. Easy work. For them to rip you if you got 20 right now, for them to take that from you is so easy, your head will spin. You won't even know they took it. It'll feel easy. You'll go to the bank and pull it out and put it right in their hand in person and be looking right in the property, standing right there. It's so easy for them, because it's all a mental game. They're matchstick men. There's professional scam artists, and you're easy, light work. Walk in the park, taking candy from a baby. You better get your knowledge up. You're going to learn one way or the other. And don't say I didn't tell you. That's all that, but that's the lesson, because it's the people who actually have less capital who are locked into that mentality of, it took me so long to get this. They're trying to hoard the cash. You got to let cash flow. That's why they call it liquidity. You got to let it flow. There's a flow to money. You got to let it go back out, come back in, go back out, go back in. You got to let that thing flow a little bit. But you got to build up your knowledge. Once you have the knowledge of real estate, you can always make money. You never have a money issue. Even if you're low on cash, because you have the knowledge, you could go out. You could go out. You can link up with private investors, private money lenders, people who don't have more people have money, believe this or not, but this is the truth. More people have money than have knowledge. More people have money than have knowledge. So if you had knowledge, you could always get the money. You could always get the money. Money is faster to raise. How long does it take to earn 100K for the average person? They might have to start calculating years, especially if you're talking about cash, after tax money. How long does it take to raise 100K? I could pick up the phone right now and raise 100K. I could pick up the phone right now and raise 100K in 10 minutes. Seriously. So think about those two mentalities, years versus. You need the knowledge. You don't need the money. Get to the knowledge first. And not only will you not need the money, but you won't be as wasteful with the money that you have, because you won't be squandering it. You have to be a better steward with your money. Part of being a better steward is your education. Part of being a better steward is your education. Do you have any flips that are ranch houses that I can purchase? I'd like to purchase a finished ranch style home from you. DM me. I'll have to look at the inventory, but I'll also have to, we have other people who are flipping. So if you're looking to buy something turnkey, like rental properties, I have some people who have some stuff. Like we have some turnkey multis and stuff like that. There's definitely ranchers out here, like 1-story properties. But Philly's more of a 2-story type of city. So not necessarily. But that doesn't mean I don't know people within our inner circle. Or if you were tapped in, you could blast that out, network. There's people all over the country with deals all over the country. I'm thinking of like 5 people in our inner circle that I would take that messaging to and say, hey, Do you have anything like this? And I'm sure they'd be like, yeah, let's make it happen. For your boots on the ground programs, is it just cash flow properties, or do you also? And then there was nothing after that. It's a cash flow and flip. So some people want to flip houses, some people want to buy and hold. So we do both because we're facilitating. I have the contractors, I have the relationships, I have all the stuff. So the architects, the engineers, the permit expediters. So we will whatever you want to do. If you want to come in and flip, come in and flip. If you want to come in and hold, come in and hold. If you want to do a mixture of both, hey, let me do one flip and then let me do 3 holds with that cash. A lot of people are doing that type of stuff too, to offset costs. So you can definitely do a mixture of both. A couple more questions and then we will, actually we're only at 9:40. We'll run a couple more questions. Deb says, my city may allow me to build a small house in my backyard. Can you refer any builders in my area? Let me reach out to a couple of folks because I know where you're at. She's in like upstate New York type of area. Like I want to say Poughkeepsie. Is that right, Deb? I want to say Poughkeepsie. Now you know I have a sharp memory. But yeah, that market, I'll reach out to a couple of folks. I know one person who's definitely building out there, and they're doing ground up. Yep, she said yep. So they're doing ground up out in Poughkeepsie and thereabout. So let me reach out to them and see what they have. Shoot me a text as a reminder so that it's in my phone. Shoot me a text, Deb. Got to jump off. Looking forward to making this deal come to life. Yeah, Vanessa's working on a multi-family project. She reached out. She's doing all my moves. She reached out to the appraiser before she bought the property or put out the offer. They confirmed value. She's just studying my moves. I'm starting to feel like a sensei out here. People trying to hit me with my own moves. William Mendez, does the rehab cost always come out the same as the estimated rehab cost? You must be thinking about getting in the boots on the ground program. So the rehab costs, how we'll do rehab costs within the boots on the ground program, we will do the estimated costs. Those are based off of historical costs, like what we're doing deals for right now and based on what we're seeing. We will, before you put out an earnest money deposit, we'll go back in. There's usually a 5-day window. We'll go back in and reinspect the deals with the head foreman and the head contractors to confirm the rehab budget. If there's any variance, it's usually small, 5%, 2 to 5%, which could be like a couple thousand here or there. Swing it. We can usually negotiate people back down on the pricing. So you'll be fine. And it doesn't really sway the numbers because what I like to do in my deal analysis, if you guys will watch, I'll probably do another one like deal of the week. I'll probably do one. I think the last one I did was like Wednesday or something like that. But I'll do another deal of the week. I'll keep doing those so you guys can see the analysis. But when we're doing that, we're pretty conservative. So when I run my comps, I'm pretty conservative. I'm not trying to be overly aggressive or too conservative, just right in the middle. So I've seen appraisals where we said, hey, this property's going to appraise for 245, came in at 290. I had one guy, we put the appraisal at 550, came in at 650. He got 100K pop to the upside. He cashed out, refi 90K, 95K on the deal. So even if the rehab budget went up 2%, if the appraisal comes back up 40, 50K, it's going to completely wipe out the extra couple grand in the rehab budget. But you know the rehab budgets on a boots on the ground deal before you close on the deal. You know exactly what the rehab's going to cost, and that's all locked in, and the contractors are going to run the play. So hopefully that answers that question. Guys, if you're getting value, DM me cash flow. If you want to get the free trainings, DM me boots on the ground. If you want to learn about the boots on the ground program and tap in there, book a call with me and my team lead, Justin. You can speak with him. He'll break down everything for you. If you want to get into the real estate ride along tour, August 31st, tickets are almost sold out. People keep reaching out to me more. When I was talking about it in June, they're like, it's like in August. Now it's almost here. We're almost at the end of July. If you want to tap into that real estate ride along tour, DM me ride along. If you want my stress test toolkit, my cash flow analysis tool, I'll send you the free link for that. Just DM me stress test. We'll send that over to you. And like, comment, subscribe, share the content with somebody who you want to get value. Don't be selfish, as I'm giving you the free game to try to be stingy with that game. Ronald said, hello from Boston. Boston's an expensive market. If I was in Boston, it would be just like New York. I'd be looking for ways to invest out of state. or in markets like Springfield or something like that, where they have great big multifamily properties that are a little bit cheaper and need rehab. That's what I would be doing if I was in that market. I'd be looking at probably Connecticut. If I was in Boston, I'd be looking at Connecticut or Philly. I'd probably go straight to Philly, but I wouldn't necessarily bypass Connecticut. What was that? Again, I have to DM you. Sorry, joined late from Boston. If you're from Boston, DM me cash flow. If you want some of my free real estate trainings or you want to connect with me, my team, just DM me cash flow. We have the Boots on the Ground program where we find, finance, rehab, tenant, and manage properties for you. You can DM me Boots on the Ground. If you are interested in our real estate ride along tour, that's going down on August 31st. DM me ride along. Just like that Ice Cube movie. DM me ride along. And we will send that information over to you how to get tapped in there. That's our cheapest mentorship program anyway. And you get lifetime access to course content and a 24/7 cash flow hoodie. I'm dropping the white hoodies on you guys on this ride along. Each ride along, we drop different color hoodies. So some people are collectors. I have some people with like two, 3 hoodies. Like they want to keep coming back and collecting. But we keep that as a small group anyway. And then if you want our stress test toolkit, our deal analysis tool, the same thing that we use inside of the Boots on the Ground program. DM me stress test. Brian, I'm stressed. And we'll send you the stress test toolkit analysis tool. Yeah, DM me ride along. If you're interested in coming out to spend a day with me in Philly, we will see about 15 properties in different stages of full gut renovation. Some finished, some being demoed, some in the middle of framing. We'll show you the city, show you how to navigate out of state and how to invest out of state. Teach you the whole game, lace you up with contractors, architects, engineers, different relationships. We will also get you dialed into construction budgets, rehab budgets. So each deal we walk in, we give you the rehab budget for that deal. So you see exactly how much it costs to build. If you want that experience, definitely reach out, DM me right along. Those tickets sell out fast, especially now that we're getting closer to August. Those tickets will sell out very quickly. So reach out, DM me right along. We'll get you tapped into that as well before those tickets sell out. Once they sell out, they're done. Because I don't like to get 2 buses because then I'm not on one of the buses so that I can't spend that time. When we're riding around from location to location, it is pretty rapid fire. But when we're riding around, we do a lot of back and forth talking. There's also a lot of networking at these ride alongs because there's people tapping in. Like I'll have GCs from other markets tap in. We have investors from all over the country, even outside of the country, who will tap into these ride alongs. So just the networking alone, the relationships you can build is worth it alone. But we're going to lace you up with the game. So just DM me about all of those things and we'll get you guys tapped in. Cheryl, you said send me the link. Text me, email me, however you got to the YouTube channel. DM me or text me or email me, and I'll send you the stress test toolkit link. Don't comment toolkit. Don't comment cash flow. Don't comment Boots on the Ground. If you do that, me and my team will just reach out and tell you to DM us, or we'll just DM you and say, check your DMs. But DM me. That's how you get a hold of me. Somebody said, I'm looking in Wisconsin for investment properties. Thoughts on Milwaukee? I don't have any thoughts positively or negatively on Milwaukee or Wisconsin, but my focus is on the top 10 cash flow cities in the country. I'm a low-hanging fruit investor, so I see no reason to get outside of the top 10 cash flow cities in the country until they dry up. And then I'm going to look at the next list of top 10 cash flow cities, and I'm going there. So if Milwaukee pops up on the top 10 list, then I'll be in Milwaukee, or I'll be considering it. But I'm going to be in where I consider the best of the top 10 cash flow cities. That's where I want to be until those markets dry up. If they don't dry up, then I won't move. It's that simple. Low-hanging fruit. Low-hanging fruit. It's a good mentality, and it will keep you safe and keep you winning. It's not how good you're doing. It's how long you're doing good. So that will keep you doing good for long. So, guys, hope that helped. We're going to wrap this up because we're bumping up on 10 o'clock. We've been running for a little over an hour. Maybe I gave away too much free game. I don't really know. But that's not really my concern because 90% of people will take the game and not do anything with it anyway. I'm here for that 10%. I'm here for you guys to win, and I'm abundance mindset. So if you take this game and run with it, all you're going to do is create more jobs, create more affordable housing, and uplift communities. Why am I going to be mad about that? You think I'm clocking you? I'm not your boss. I'm not your manager. I don't care how much money you make. I want you to make a lot of money. I also don't care if you do more deals than me. I will cheerlead you from the sideline. I would love for you to go do more deals because that just means you created more value, and I created more value through you. There's no way for me to lose by helping you to get to the next level. It doesn't work that way. That's why this game is funny. That's why I love this game. There's no way for me to lose by helping you to get to the next level. If somebody's scarcity mindset and they're jealous and they're walking around clocking you, how much money you're making, some of these guys want to be the limit. Some of these mentors want to be your limit. You can't outdo the sensei. You can't outdo the master. Some of these guys have big egos. You can't see them physically, but they're massive. They're the size of Texas. I can see them because they want to clap back at me. They want to try to get at me, but they really don't have no knowledge to get at me. They're really afraid of the knowledge because the well is deep. The tip of the iceberg is smaller than the iceberg, bro. Below the below the waterline. The well is deep. So I am not your limit. I'm your motivator. I'm here to help you to find your limit. I'm not your limit. I'm Morpheus. You might be Neo. And I'm fine being Morpheus. Right? I don't need to be the one. But I'm here to show you the path and help you guys to get the hell out of the 9 to 5. You got to get the hell out. Especially with where this economy is going. I'll leave y'all with that. Robotics, AI. With where tech is going, jobs are going to get crushed. A lot of stuff's going to get crushed. You sitting there thinking you're going to be a good employee, you're delusional. You better get out. America's becoming a renter's nation. This stuff's going to get real serious, real fast, faster than you can even respond to it. So the time is now. All I'm going to do is keep warning you and motivating you. But I already know I can't save everybody. I ain't trying to save everybody. If you're ready to listen, listen. If you want to pay that ignorance tax, go pay that thing. Go pay it. God bless you. It ain't going to hurt me either way. But if you want to win and you want to learn multiple investment strategies and you want to learn how to be your own boss and how to do it your way, how to be free thinker, how to do your own strategies, how to get to the next level faster, then tap in. It's all there for you. Oh, Pat Diggs said, I'm in 3D printing. This man's spitting facts. You're in 3D printing. Guess who flew out to meet with the first U.S. 3D home printing company in 2018? The robotics wasn't even ready yet, and it's still not ready yet. I flew out. I got on a plane. I flew out. I said, I got to meet with these guys. I got to stand there and see this thing, where it's at. I'm watching it. Somebody said, Brian, did you see that? I see everything. I see a lot of things that I don't even talk about. Right? So this game is getting deep. Even the whole real estate game is going to change at some point. You got to stay on the trends. You got to stay locked in. This is just a frequency, guys. You can come back 5 years from now. I'm still going to be on this frequency. So this is a magnetic service for you guys to keep you tuned in and locked in on the right frequency that's going to allow you to keep accelerating in real estate. So that's going to lead some of you to 100 deals. That's going to lead some of you to 500 deals. That's going to lead some of you to starting a real estate investment trust and do thousands of deals. That's going to lead some of you out of the 9 to 5. That's going to lead some of your kids to not having to work for people. It's all good. I can't see the bad in it at the end of the day. It's going to save some of you from a scam contractor. It's going to save some of you from getting into the program where, oh, the guy says, just give me the 50K and I'll do the deal for you. No, don't give them your 50K and they do the deal and they deed you the property, all this BS. Go be an owner. You can do it. You can do it. You can be an owner. You can learn this stuff. You can get to the next level. Don't let anybody tell you you can't. Don't let these gurus tell you, oh, that knowledge is not for you. I had a guy tap into my channel recently. Oh, you shouldn't be teaching people that because new investors, they're not ready for that. They're going to fail. Who the F are you? Who are you to tell people they're not ready for knowledge of real estate? Who are you? How arrogant of you. Like, you think you're the gatekeeper of knowledge? Like, you're not going to tell people this knowledge on how to invest without cash because they can't handle that. Who are you? You think you're the limit. You think you're the one. And you think you're so the one that you can control what people should have access to. A lot of this knowledge I give you guys for free, has been hidden from us for hundreds from since the beginning of time. You think guys just started doing no cash, no credit investing? This guy's been doing this for hundreds of years. It's just been hidden. But some people who even look like you and talk like you and talk like me and look like me think you're not ready for the knowledge. They don't think you should know about it. It's crazy. These people are sick. That's why I'm here, because I'm Batman. I'm here to whoop ass. I'm not here to just be talking. I'm here to whoop ass. I'm here to step on some toes for your benefit, so that you don't have to deal with these guys. And some of them think they're helping you by holding you back. That's the crazy part. They swear they're helping you by holding you back, but really they're afraid you'll get bigger than them, and their ego will get hurt. They just don't know it. Hope that helps, guys. I don't want to keep going on these rants, but I hope that helps. Somebody said I got about 250K for my first flip, but lacking the blueprint to get started. We'll be reaching out. Reach out. And I'm not going to, when you reach out, I ain't going to say, yeah, send me a wire for 200. No, I'm just going to show you how to take your money and be a good steward with your money. You do your thing. I ain't trying to get all in, no partnership, syndication. No, you don't need that. You don't need partners. You just need the knowledge. You want somebody with the expertise, hire them and pay them to do it. They don't need to be your partner. You need somebody with legal background, hire an attorney. You don't need to get an attorney, make them your partner. Then you get in a partnership dispute. No, you don't need all that. So definitely reach out, DM me, cash flow, boots on the ground, ride along, DM me, share the content with somebody else who you want to get value, or if they're thinking about getting in the game, help them to not get hurt. Get them passed over to this information, tapped into the channels. They can go watch the lives. They can go learn this game. And they can become a free thinking investor that can think for themselves, that can make decisions, that can guide themselves. That's what I want for you guys. I don't want you to be beholden to me, beholden to the boots on the ground program. I want you to grow through these programs so that you can walk, fly on your own. And then that's what allows me to help other people who need more help. The squeaky wheels get the oil. If you're no longer a squeaky wheel, go run. If you need me, tap back in later. I ain't going nowhere. Knock on wood. We don't have that crystal ball, right? We don't know how long even I'll be on this planet. Any of us. But as long as I'm on this planet, you know the frequency I'm going to be on. So tap back in when you need it. But make space for the next guy who needs it more. Go off and run. That's the mentality. Brian Grimes, your real estate mentor. I'll see you guys on the next one. And see you guys on the inner circle call if you're in the inner circle.